Welcome back to Squawk. Before the break, we heard about Netflix's disappointing subscriber ads in Q1 and the company's disappointing Q2 guidance. I want to dig a little bit deeper into the stock story of the morning with Rich Greenfield. He, of course, is LightShed Partners co-founder and recommender of all good shows, including Ask My Agent. Joe just mentioned it. You got to watch the subtitles. It was a good rec. It was a good rec, Rich. We appreciate it. Let's talk, though, about the stock. Were you surprised? And more importantly, what does this portend, not just for Netflix, but for frankly, all of the sort of stocks that have won during this pandemic, and even the subscription business model itself, which seemed to just take off like a rocket. And now I think there's real questions about its staying power.
Well, I'd say, first of all, Andrew, obviously this quarter was disappointing. There's no way around the fact that probably the guidance even for Q2 being more disappointing than the Q1 results. That said, I want to remind everyone that's watching today, this has happened before, many times, actually. I mean, the reality is forecasting Netflix on a quarterly basis has become increasingly more challenging as the subscriber base has grown. The size of the beats and the size of the misses have grown pretty notably. I mean, if you go back, I remember being on Squawk, in the middle of 2019 after that Q2 print. We tend to all have a habit of over extrapolating any one quarter and trying to change the entire future of where the world is going. I think if you take a step back, though, and I want to get to your question on all the other platforms, the reality is what's going on. Everyone is shifting to streaming. You've seen, obviously, your parent company jump in with Peacock. You've seen Discovery. You've seen Paramount Plus, part of Viacom. Everyone is moving towards streaming. All of the best content is moving towards streaming. Cord cutting is accelerating. I mean, Verizon just reported, you had Hans on, they are 7% lower in video subscribers year over year. That's a pretty crazy rate of decline in video subscribers. Your parent company, Comcast, is talking about losing upwards of 2 million video subscribers in 2020. So the underlying trend of the shift from linear to streaming is just beginning. And remember, on a global basis, just keep this one stat in mind. In all of Asia Pacific, Netflix has 27 million subscribers. It's a market with hundreds of millions of potential subscribers over time. So again, it's very easy to get caught up in the negativity and being upset about Q1 numbers. The reality is there's a long way to go, and we're still pretty early in the transition to streaming television.
Okay, fair enough. I think but the larger question is, what does it portend for the subscription business more broadly in terms of just the pace of growth and how much was sped up by the pandemic, and therefore, how do you calculate what comes next?
Well, I mean, look, there's the way we were trying to just thinking about it is if you were to look at, if you take Netflix's Q2 guidance and you sort of look at the prior 4 quarters, so from Q3 2020 through Q2 2021, so that 4-quarter period, they're projecting roughly 16 million subscriber net adds over that period of time. In the 4 quarters before that, which was obviously driven by the pandemic, both really Q1 and Q2, as well as a really good end to 2019, they added over 40 million subscribers in that prior 4 quarters. But again, if Andrew, if you go back to what does this mean for the future? The average of those 2 periods is obviously, in the high 20s. I think the reality probably lies somewhere in between, right? This is not, you probably went a little too far, too fast for all of, look at Disney. Think about the explosive growth of Disney. Does anyone really think Disney's going to have the type of growth in the next 3 years that it had over the past 12 months between launching and the pandemic surge? All of these factors have, I think, led to, really exponential growth that is going to be hard to keep up with. But the underlying trend, especially as the rest of the world starts to catch up in terms of demand for streaming television, I don't think the underlying trend has changed at all. There may be a bit of a pause, but the one other thing I want to highlight, because I think you and Joe just highlighted the comment about Call My Agent. The reality is Netflix, I think, and all of these services are really driven by, blowout content. And when they don't have a blowout content or show in a given quarter, I do think that they end up suffering. And so I think we do realize that net ads, not churn, but net ads are really, or gross ads, sorry, are really driven by huge programming. If you listen to Netflix, they could be lying, but at least the comments all seem to center around the second half slate is incredible and really heavily weighted. And so the type of numbers that you could see in the second half of this year, my guess is really going to surprise people. And I think we'll be having a very different conversation as we move into Q4 than we're having right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.